Welcome to the Stock Market Daily News Podcast, your quick roundup for Wednesday, April 16th, 2026. I'm bringing you the key market stories and numbers from Tuesday so you can make smarter moves today. Let's kick off with the big picture. The S&P 500 finished yesterday down 0.9%, closing at 4,984. The Dow Jones Industrial Average fell 1% to 37,192. The Nasdaq slipped 0.7%, ending at 15,643. Cautious trading dominated the session as investors digested fresh signals on global debt and shifting sector leadership. Now, here are the top stories you need to know. First up, Tim Cook makes a high-profile bet on Nike. Apple's CEO invested just over $1 million to buy 25,000 shares of Nike at around $42 each. After Nike stock tumbled 30% since December, simultaneous purchases by Cook and Nike CEO Elliott Hill, totaling nearly $2 million, sent Nike shares up more than 2%. This insider buying signals strong belief in Nike's turnaround after a challenging year of falling sales and shrinking margins. For investors, it's a reminder to watch for leadership's own moves when stocks look beaten down. Story 2. The IMF's warning on global debt is turning heads in the crypto community. The International Monetary Fund projects that worldwide public debt will reach nearly 100% of global GDP by 2029. That means every dollar of economic output is matched by government debt, raising long-term questions of fiscal stability. While higher bond yields traditionally draw money away from risk assets, mounting debt concerns have some institutional investors eyeing alternatives like Bitcoin as a hedge. The takeaway? Fiscal trends could reshape the risk-reward landscape for both bonds and digital assets. On to Story 3. Strategy's high-yield stock, SDRC, is sparking a new wave of crypto treasury activity. SDRC offers an 11.5% annualized dividend, paid monthly, and is structured to fund continued Bitcoin accumulation. The stock set record trading volume over $1.6 billion as new fintech and DeFi players bought in to capture both yield and indirect Bitcoin exposure. SDRC dipped slightly below its $100 par value after going ex-dividend, temporarily halting new share issuance. This trend highlights rising appetite for innovative yield vehicles that blend traditional dividends with digital asset exposure. Fourth, United Health is making headlines as a classic dog of the Dow play. The healthcare giant stock is down 46% over the past year, now trading just above $314. But with its quarterly dividend growing to $2.21 per share and insider buying from board members and executives, analysts see a recovery story taking shape. While legal issues and higher medical costs remain risks, United Health's projected earnings rebound and cash flow keep it on contrarian investors' radar. Finally, in real estate, the Global X Super Dividend REIT ETF, ticker SRET, is under the microscope. Yielding a robust 8.5%, SRET has attracted buyers seeking global real estate income. Yet, some underlying mortgage REITs, like Blackstone Mortgage Trust, have reported credit losses, and Apollo Commercial is restructuring its loan portfolio. Although SRET regained recent ground, its distribution history shows cuts during periods of rate spikes. Investors should keep a close eye on credit trends and the interest rate outlook when considering high-yield REIT exposure. Let's wrap up. The S&P 500 closed at 4,984, the Dow at 37,192, and the Nasdaq at 15,643. Key themes? Insider buying is flashing confidence in select beaten-down names. Global debt risks are driving demand for alternative assets, and yield hunting remains in focus, whether through dividends, REITs, or crypto-linked stocks. Looking ahead, watch for more corporate earnings this week and fresh economic data that could shift the Federal Reserve's outlook. Thanks for tuning in. Be sure to subscribe and join us every weekday for your essential stock market news in under 3 minutes. See you tomorrow.